Hi, good morning. Welcome to a brand new week, and we are delighted that you're with us. This is RN Bhaskar from BKBB, which is an acronym for Bhaskar Key Business Baatein. This is a channel that brings to you policy analysis, conversations, occasional business stories. But right now, at 8:15 in the morning, we come to you with news behind the news. And today I have my panelists who are Katya, welcome Katya, Aparna, welcome, Hussaina, welcome. And together, these three co-panelists will discuss the following titles that you see on the screen. The first title is Pension Deposit Stumble. The second is Airlines Face Rough Weather in India. And the third is sovereign funds begin eyeing India. Anyway, so let's begin with the first story. Katya, could we have you?
Good morning, sir. So very interesting. Pension fund deposits as such have not changed, but public sector banks' share has fallen drastically in the last 5 years, which is before the pandemic, and now, and the fall is a massive 87%. So it was around 22,000 crore back then, and now it's gone down to 2,000, around 3,000. It's a sharp drop. But actually, but the deposits, pension deposits in general, have not gone down. If you look at all the scheduled commercial banks, which includes sector banks, private sector banks, as well as SCBs, etc., small finance banks, etc., but their pension deposits have doubled. So the total pie is around 66,800 crores. So now, why? But data shows that private banks have taken a better step at getting garnering these deposits for themselves, while public sector banks have seemed to have lost their edge. Earlier they were seen as more trustworthy, they had better branding, but that seems to have fallen a little bit. And why is this a problem? It's a problem because we already have a big gap between loans as well as as well as deposits. The ratio should be correct. RBI is very strict about it. And pension funds are long-term stable deposits. So when this patient capital is very much required in large banks, and public sector banks are large. I don't know why they've missed the bus. Do you have any theories, sir, on why they've got it wrong? Also, small finance banks are more active.
Very true. I don't know why. In fact, it's worrisome when pension deposits start declining
Right.
because that's peak security for the working class. Now, this could mean two things, possibly. One is the job losses that have taken place.
Right.
So many of the automatic deductions that used to take place for pension, those disappeared. And the second possibility could be nervousness among consumers. They've seen prices going up, they've seen incomes falling, they've seen the markets falling, and that's why the allocations to pension deposits may have been lower. I don't know what the real reason is, but any drop in such deposits is worrisome. It's worrisome because it points to consumers forgetting one important part of security for the future. Obviously, the present has become more important than the future.
Right.
Maybe let's see. And that takes us to the second story about airlines. Could we have you?
Yes, sir. So, airline in India is soaring, but here's the twist. Not all airports are flying high on profits. In fact, many are bleeding money. According to the Airports Authority of India, 81 of its airports, which together carried just about 6% of domestic passengers last years, have piled up losses of nearly 10 rupees 10,852 crores over the past decade. Now, here's the eye opener. Almost half of these losses come just 10 airports. Right at the top is Delhi Safarjung with rupees 674 crore gone, followed by Agartala at rupees 605 crore and Hyderabad's Begumpet close behind at rupees 565 crore. Dehradun, Vijayawada, Bhopal, Aurangabad, Rajkot, Tirupati, etc. are another members of these list, which makes these losses in the airports. So what is happening here? Experts point to the Udan RCS scheme, which was designed to boost connectivity to smaller towns by subsidizing routes. Sounds good in theory, but with low passenger number and high operating costs, many of these airports just can't break even. The big question now is, should the government keep pushing flights to smaller cities at such a steep cost, or rethink the model to make regional flying truly sustainable? India's aviation sector is hitting some rough air. Almost 40% of key safety posts in DGCA, BCAS, and AAI are still lying vacant. And funding from center has been tightening year after year. When it comes to airline, Indigo is one of the um, profitable flight, over rupees 7,500 crore this year, while others like Air India, SpiceJet, Akasa are deeply in loss. One punctuality too. Indigo leads with more than 82% flights on time, followed by Akasa and Air India. Technical glitches have dipped compared to last year, but with 183 incidents already in 2025, the industry still has plenty of challenges to iron out. So what do you think? Do you think like the airline should be kept in the smaller towns for connectivity, and or the government should do that only on the major cities in India?
Well, airlines making losses, almost all the airlines except Indigo. Indigo's done a marvelous job. Is worrisome. But more worrisome is the allocations of funds for air safety, passenger safety. Now, when the government itself allocates less funds for that area, it means flying has become risky. And there's a third issue, and that is when airports start making losses, it means that people are either not flying that way, or it means the costs of doing the costs of maintaining that airport is a lot higher than revenues from advertisers and passengers. Obviously, the airline sector needs to have a very careful look by the government, which controls much of the regulatory environment for airlines. Even the airports that are there, a lot of it depends on government control. And that is why, as mentioned, and so happens that all the issues that you raise, Aparna, are issues that were presented before the parliament. So these are not reporter statements, these are parliamentary statements, which means that airlines need to be pushed up. The airports authority needs to get more funds to make sure the airlines are more reliable, more punctual. Once you start doing that, passengers will start coming in. Anyway, thank you very much for the story. And let's go to the third story, which is equally interesting, about sovereign funds looking at India. Can we have you, Sarah?
Yes, sir. So, India is emerging as a long term investment destination for sovereign wealth funds and global pension funds. And as sir, you always say that numbers tell the story. Well, according to the recent data from Finance Ministry officials, investment by sovereign wealth funds in India's financial service sector have seen a massive jump from rupees 2000 crore in 2021 to rupees 16,000 crore in 2024 and 2025. Even global pension fund investments, while slightly dipping from a peak of 16,000 crore, they still stood high at rupees 12,000 crore. So, what's driving this shift? First, the stability and predictability of India's policy environment is proving attractive. At a time when global markets are volatile, India's macroeconomic fundamentals, steady GDP growth, a strong digital infrastructure push, and improving ease of doing business are offering rare certainty. Financial services, in particular, have become a magnet for foreign capital, attracting the lion's share of flows. Sovereign funds like Abu Dhabi and Singapore are betting big on India's banks, fintech, and digitization. Meanwhile, Canadian pension funds are focusing on infrastructure like roads, ports, and highways, further underscoring confidence in India's long term story. So there's also a broader policy shift which is enabling this influx. So there is relaxed foreign direct investment limits, simplified tax framework, and targeted exemptions for long-term funds, which are also giving global investors fewer reasons to hesitate. And according to various industry experts, this is not hot money. These are long term credible bets from patient capital. And they say that this is what exactly a developing country like a developing economy like India need. And it reflects a growing perception of India not just as a growth engine but as a resilient and reform oriented market in a world that is looking for geopolitical and financial stability. So, what is your analysis, sir? Do you think that this surge in foreign interest a sign that India is finally ready to lead the global south economically?
In fact, I liked your news item because of two reasons. One, at a time when investors are fleeing India, sovereign funds are looking at India. That's a very good development. And the second is that sovereign funds typically are like pension funds. They look at long term, they don't look at short term.
Right.
And since they're backed by governments in the respective countries, there's less kiddishness about these funds. So when these funds start looking at India with a lot of promise, you wonder what could have driven them to India when investors are fleeing India. Well, I can see two reasons. One is investors flee when even short-term returns are dangerous and the regulatory environment for entrepreneurs is not very good. And the second reason could be that at a time when the entire world has seen too much of turbulence, safe havens of the past are no longer safe. Nobody wants to invest in the US or UK, which were favored destinations.
Right.
The whole of Europe is down on its knees, and sovereign funds have huge money they need to park it somewhere. And India has become the bright spot in an otherwise gloomy environment, not because India is wonderful, but because when others collapse, India looks wonderful. Money has to be parked somewhere. So sovereign funds are coming to India. It's good news for India, and India should capitalize on that to make sure it grows faster. Thank you very much, Hosseina. Good story. And that, in a way, takes me to the end of today's session. And that also takes me to question and answers. But before the question and answers, my usual reminder. First, please click the subscribe button if you've not clicked it already. Second, do click the like button. It helps us in the algorithms that it generates for YouTube. But the third reason is crucial. Tell all your friends about us. We need people to know more about us. And you can help us grow faster. We are growing, but we can grow faster. Now let's take the comments and questions that are coming. Uh, well, if bank deposits are growing and at the same time pension deposits have not, provident fund deposits have not grown, could it mean that banks are aggressively pursuing better return funds than lower return funds? Katya, your views?
Sir, if they were lower return or it is, return funds, then private banks won't be chasing them. Private
Sure.
banks have expanded their share of, pension funds, which, and it shows that, they have more salary accounts. Actually, private banks, if you see, are very aggressive about selling, salary accounts from companies, etc. That kind of aggression was not seen in public sector banks, so that could be a problem. And it's it's patient capital, so patient capital is very important for banks. We've gotten everybody, including HDFC, everybody gotten into trouble for their deposit to credit ratios. So I think that is the issue. Maybe they were more aggressive in chasing them. That's why PSBs, public sector banks, are losing the edge.
That's a good possibility. And thank you very much for the clarification. There you have it from Katya, the expert herself. And then we come to the same question, and that is on airlines. Will the state of affairs continue? Can the regulator and the government make sure that this sector becomes vibrant once again? Well, good question. Unfortunately, it is a government that has to answer them because we only analyze what is available. But yes, airlines have a tough time. But the fact that Indigo can still make profits and still arrive on time also means that Indigo has paid more attention to management and management operations than other airlines. If the other airlines become a little more wiser, a little more proactive, possibly they can also improve the situation. And that, in a way, takes us to the third question. And the third question is on sovereign funds looking at India. Sovereign funds looking at India is a great thing, especially large funds which are Scandinavian funds and the Middle East funds. Qatar is one a good example, or Saudi. Does that mean that India is a place worth investing in? I wish I could say that. The question is interesting, but sovereign funds have a long outlook. They believe that this blip could get over, but sovereign funds also need to park large amounts of money. They can't be nimble on the feet on short-term opportunities. And that is why sovereign funds look at the gloom and doom around and find that India is a safer spot, so they brought the money to India. But if India's growth story does not live up to its mark, maybe tomorrow there'll be some other favorite investment destination, and these funds will gradually withdraw and park their money there. Money needs a parking space. Right now, India is a good parking space, but it doesn't mean this parking space will last forever. Anyway, thank you. It's good to have you with us. Have a lovely week ahead. And yes, tune in tomorrow. We'd like to see you once again for news behind the news. Take care. Have a wonderful day ahead. Take care.